Good afternoon, everyone. I am as excited as you all are for this talk. I know we have our introduction for him, but let me just tell you why you should listen and why you should be calling your friends to make sure that they watch this. I've been in the industry since 2011, and the first time I've heard of him was around 2016. I was amazed at how he analyzes things that is more than meets the eye. When it comes to stock picking, is first and foremost, and all the more when he became my boss. And we want you to all to see this, that he has that wisdom today and get the chance to ask him questions live here in the PSE Expo 2022. So without further ado, let's watch this video.
Raymond Neil Nicky Franco is a certified public accountant and was among the first few chartered financial analysts in the country, receiving the designation in year 2000. He is the only Filipino recognized by Forbes magazine as one of Asia's top 10 best stock pickers, ranking a top 5. He is the head of research of Abacus Securities and the director of its online trading arm, MyTrade.
Hello, good afternoon, everyone. Thank you for taking the time to join us for this presentation. I hope by the end, we would have imparted insights and knowledge that would help you, each and every one of you, in your own journey toward financial freedom. So let me share my screen now. As you can see, title of the presentation is Crossroads, Navigating Change in 2022. We all know that the elections are coming up, but there are also other changes that are going to happen or are already happening as of the moment. So we will try our best to help you navigate through all these changes. But first, let me begin with a quote. As you can see there, Crossroads. Uh, Crossroads denotes choices. We choose where to go. But before you ask which way to go in your financial journey, remember it's also important to remember where you've been. So you have to look back, see if what you've been doing has been helping you, what you've been doing is working. If not, maybe it's time for change. And we're going to be there for you. We're going to help you make the right decisions. Um, so investors are not alone in this journey towards financial freedom. We're here to help, but also the Philippine Stock Exchange itself is always there to look after the interests of the investing public. Um, we therefore are, or I myself would therefore like to take this opportunity to make suggestions first, no, with regard to investor protection. And I broke it down into 5 different topics. The first one is tender offers and delisting. What I noticed is that current rules can be gamed. And in particular, we have suggested previously that the appraiser for the fairness opinion should be a third party appraiser, must be independent. It should not be They should not be hired by the listed company itself. And instead of reporting to the listed company, the third party appraiser should report to the PSC. We also think that some valuation methodologies should be excluded because these are the ones that would often pull down the valuation when it comes to fairness opinions. Next, with regard to initial public offerings, this has been a hot topic recently. Um, a lot of people lost confidence because it was wrecked by just one poor offering. But as you can see in the chart there, um, most of the pandemic era IPOs have actually fared well. Um, and again, it was just one poor offering that sapped investors' confidence. So in our view, the PSC must move forward quickly with new rules to strengthen confidence. And one of those rules, which the PSC has already talked about, is the need for a stabilization fund for IPOs. However, we would suggest that there should be exceptions with regard to the imposition of a stabilization fund, specifically for small and medium enterprises that may not be able to afford the establishment of a stabilization fund. And maybe it should only apply to uh, those companies doing IPOs where most of the shares on offer are secondary shares. Next one is on earnings releases. We've also pointed this out before. Sometimes the initial press release for earnings can be misinterpreted by the public. As you can see there in the chart, I won't mention the company, but in the press release for earnings for third quarter, it said that consolidated net income for the third quarter was 4.58 billion pesos. But a few days later, when the actual 17Q came out, uh, it was reported that attributable net income to common shareholders was actually a loss of 3.3 billion. So that's what I was saying, that it can be misinterpreted by some. So we would suggest that the PSE established rules to minimize variances in the presentation of earnings. These standards can be or can vary by sector because different sectors present have different presentations for earnings. Next is on transparency. We've also noticed that some companies have corporate websites that have not been updated for years. I think it's a rule that all listed companies should have websites for the investing public uh, to be able to look into. But a lot of these, or at least many of these um, websites that we've noticed are not updated continuously. Some are even years old. Um, Next, on transparency, there should be a tightening of rules on what constitutes material information that needs to be disclosed. Again, I won't mention the company, but there was this one company that sold a stake in its one of its subsidiaries, um, and that resulted in the deconsolidation of that subsidiary. But it was not reported, and it only appeared in the notes to the financial statements that there was a loss on that transaction. So I think there should be a greater scrutiny of what constitutes material information that needs to be disclosed. There should be greater scrutiny of related party transactions, and there should be an improvement in corporate access. Next is with regard to research. I show there in the chart that only about one third of listed firms have any coverage, have coverage according to Bloomberg, and only one fourth of companies have at least four brokerages covering them. So the rest are not covered at all, or many have only one, two, or three brokerages covering them. So what this means is that uh, there's poor investor education with regards to the vast majority of companies that are listed on the exchange. So um, we would suggest trying to find ways to increase research on companies, especially on small caps. The PSE should also help brokerages ensure the equal and quality access to management, and there should be protection for analysts from blacklisting by certain companies, because I've been in the industry for 20 plus years, and sometimes, or too often, it seems that companies are very sensitive to negative research reports. But uh, the PSE should help us relay to the companies that it's part of the job, and that there's nothing personal about doing research on their companies. So let's now go to the presentation proper. Um, so one of the things that we're all looking at, of course, is the COVID-19 situation. The good thing is that the Omicron wave is already fading as fast as it arrived, and we're hoping that this is the last major wave. The problem is that the positivity rate remains very high, at about 33% yesterday. Despite this, we are expecting pre-Omicron mobility likely by March. As you can see in the chart there, focusing on the green line, you could see that mobility for retail and recreation has actually bottomed out already, and it has ticked up. More importantly, it bottomed out at a level that is significantly higher compared to the first quarter of last year, as denoted by the light green shaded area. So what this means for us is that um, there's a good chance that growth will be as good as it was in the fourth quarter of last year. On the other hand, it can still disrupt business, especially supply chains. One particular issue is that China continues to have its zero COVID policy, which means that if they discover one or a few cases in a particular area, they're going to shut it down immediately. And the problem is that they're seeing cases in um, places where they have their biggest ports. So if they shut down their biggest ports, then that is going to cause another chain reaction in terms of the supply chain for the global economy. So I was saying, we still expect first quarter GDP to be strong, and the same goes for the second quarter. However, we do believe that GDP will start to normalize by the second half of this year. We're looking for GDP of between 6% to 7%. We believe that there's going to be a slight lift from election related spending, but then a drag from the Mandanas ruling. If you haven't heard, or if you don't know about the Mandanas ruling, it raises the share of local government units from the national tax take. Now, there have been institutions who have said that um, a lot of LGUs don't have the absorptive capacity to spend the additional allocations, no, that will be given to them. Either that, or they will not be able to spend it as efficiently um, as the national government would be able to do. And another problem is that one of the rating agencies said, and we agree, that the government this year would probably have minimal fiscal space to boost growth. But nevertheless, as we mentioned, we're looking for GDP growth of between 6% to 7% this year. Now, we're looking for consumer to lead the economic recovery. We expect that the revenge spending that was apparent in the fourth quarter, particularly during the holidays, is likely to accelerate this year. The main drivers for this will be the elections, greater mobility. As I said, we expect pre-Omicron mobility by March, higher remittances, especially in peso terms, and slowing inflation. There might be a major boost if minimum wages are hiked this year. Minimum wages are long overdue. The last um, the last wage adjustment for the National Capital Region was in November of 2018. So that's basically more than 3 years already where the minimum wage has not been adjusted. Next is on inflation. Good news is that inflation has moved back into the BSP's target range, and then base effects are likely to keep inflation benign throughout this year. There might be a possible uptick due to election-related spending, and wild cards will be crude oil. As Governor Jokno said, inflation might go up if oil is sustained above $95 per barrel. Another wild card, again, minimum wages. Actually, minimum wages in all regions are overdue for substantial adjustment. If you look at in the inflation numbers, we're looking at as high as 10% adjustment for the minimum wage just to cover inflation. Next is on interest rates. We're looking at the end of an era. It's one of the what this is one of the other changes that we were talking about. Changes with regard to monetary policy, both domestic and for the U.S. We believe that the BSP is still likely to hike rates later this year. The US, for its part, there are speculations that there could be a 50 basis point increase in March, and that for the full year they're going to raise by 175 basis points. That remains to be seen, but anywhere between 5 to 6 hikes, total of 125 to 150 basis points is certainly possible for the US. So this policy normalization is probably going to cause turbulence. It's already causing turbulence in the US, and it may last a while. Um, Despite the fact that the BSP is going to raise rates, we believe that domestic interest rates should still be low enough to support growth and to support loan growth in particular for the banks. Now on earnings, the good news is that the weighted average earnings per share growth for the market should be strong, in excess of 30% year on year. However, Bloomberg consensus shows that only 17 out of the 28 PSEI companies will reach or exceed 2019 recurring profit levels. So that's negative because um, a lot of them um, will only reach 80% or even lower of their 2019 earnings. And the fact is that in terms of earnings recovery, the Philippines is being left behind or has been left behind by regional and emerging market peers. Meanwhile, with the upcoming elections, the uncertainty with regard to that may delay investment decisions, and this may impact 2023 as well or even beyond. Next is on hot money flows. You can see there the chart. This chart includes the 30 companies in the PSE index in June of 2017. So we tracked the change in minority foreign ownership from that time until June 2021. And as you can see there, most companies saw a huge drop in foreign minority ownership. This is, of course, due to the fact that we've seen a lot of outflows over the past few years. Um, so 87% of the stocks in the PSE index as of June 2017 saw drops in foreign ownership. And the only company that saw a big increase in foreign ownership is Meralco, but that is coming from a low base. So we'll discuss this further later, but it portends something deeper that we would like to discuss in detail. We've also noticed that the Philippines ETF, EFE, shows no interest at all the past few years. The market cap for EFE, the number of shares outstanding for EFE has not improved dramatically or significantly recently or in the past few years. Still on hot money, as I was saying, a lot of outflows in the past few years. $7.5 billion in equity outflows since mid-2015, of which the vast majority, or $5.2 billion has been since May 2019 only. This chart may lend some credence to the theory that foreigners don't have a lot to sell anymore. But we looked at the remaining foreign-owned free float of the index members and a few other large stocks. No? And we see that the potential outflows remain substantial. The foreign-owned free float is still worth about $40 billion. Now, we're not saying that all of this is going to come out. No? Not all of this is going to go out. But even 5% of this, or $2 billion worth, would be a huge drag on the performance of the index in the near to medium term. Now, what we're looking at is the elections because it may determine if foreign investors will come back soon or will continue to stay away for the meantime. Next is on valuations. Rising interest rates is usually negative for equities. It makes equities less attractive. As you can see in the chart, the earnings yield for the PSEI is close to 6% still. Um, However, the gap between the earnings yield for the PSEI and the 10-year yield has narrowed significantly in the past few months or past year. So again, this makes equities less attractive. It makes fixed income more attractive. Now, the good thing is that only a few mega cap stocks account for 50% of the index. And that's why the market is at about 16 times PE or 17 times PE. Some very expensive names, these mega cap stocks, are also very expensive names and they distort the weighted average PE ratio for the market. So we believe that opportunities abound in smaller and cheaper stocks. Still on valuations, and this is, I think, the most important chart that we would like to discuss. Um, you can see the green line there, which is the forward PE for the index, and we shaded it in yellow because what we're seeing, at least from our point of view, is that the Philippines is undergoing or has been undergoing a structural derating since 2013. We don't think this is a random occurrence. We don't think this is a chance occurrence because the valuation of the broader emerging market space actually rose between 2013 to 2019. So at the time that valuations for our index were going down, the valuation for the broader EM index was actually going up. Um, and our view is that the D rating is likely to continue and even accelerate if recent surveys for 2022 prove accurate. Um, this table shows that the D rating is very broad based. The companies that are in white constitute 75% or 33 out of 44 stocks. In the table above show downward sloping valuations during the same time period that we showed in the previous chart. And only three stocks actually exhibited rising valuations. That's SM Prime, and URC. But since 2018, these companies have also shown a downward trend in their valuations as well. Now, what we want to point out in this chart is that SM, as I mentioned, SM and SM Prime actually have upward sloping valuations, and they prevented a much steeper derating for the market. If SM and SM Prime had performed in line with the rest of the market in terms of valuations, then uh, what what we see is that the forward PE for the market today would probably be closer to 15 times instead of 16, 17 times today. So if our view is correct and that the market is undergoing a structural derating, then the market forward PE may fall to 14 times over time, which is the average from 2005 to 2012. We would have wanted to go back earlier in time to see the valuations earlier than 2005. But as of this moment, we don't have that data. The data on Bloomberg only goes back as far as 2005. But we believe that it should also be in that ballpark, na 14 times or even slightly lower than 14 times. Now, probably the second most important topic with regard to the elections. That's the biggest crossroad that the entire country is coming up coming up to. It's a political crossroads where we all have to make a choice. Um, Now, the elections is probably going to be negative for public expenditures due to the election ban on uh, new public works projects, but still likely to be slightly net positive due to election-related private consumption. Now, others will probably have a different view, but and things can still change. But it looks like shaping up to become a two-person race. So our advice is to keep a close eye on the surveys over the next few months. Now, again, the Philippines faces a stark choice now. And one thing that we would like everyone to consider is that the fact that other emerging markets where strongmen rule have actually have relatively low valuations. Um, Russia, Turkey, Brazil, Hungary, and China have an average PE of 7.7 times compared to the emerging market average of 12.9 times. And that is equivalent to a 40% discount. Another thing that we considered is that when South Korea elected the daughter of former strongman Park Chung-hee, the KOSPI went sideways for 4 years. Now, of course, um, past performance is not any indication of future results, but I think this is something that we should be looking at. Now, again, the derating may accelerate post-election if current surveys prove accurate. Now, why do we think this matters? As you can see in that chart, um, the PSEI underperformed the MSEI during the during three previous administration during two previous administrations and the current one, and in the immediately preceding administration, there was huge outperformance. Now, a lot of this is perhaps perception, but Nomura was in the news recently, giving the vice president the highest marks, saying that she would be the most business friendly among the candidates. We believe that other foreign houses are likely to echo the same. Um, Governance clearly affects relative equity performance in our view. So this is just a page to summarize everything. No? Um, so basically, our view is that the balance of risks is tilted to the downside, and we prefer to be defensive. Our year-end physics target is 7,700 to 7,900. So that implies little upside from current levels, uh, less than 10%. With regard to our key recommendations, despite despite our defensive posture, our view is that investors should stay in the market, but they should build up cash on rallies. Meanwhile, they should also manage risks by sticking to defensive plays or sectors and value plays. We are overweight on banks, consumer retail, energy. We are underweight on conglomerates and property. Now, these are our top trades now. Switch from AC Energy to SPNEC, from Wilcon to All Home, from BPI to BDO, from Ali to SM Prime, from JGS and AEV to GTCAP. Now, we expect Monde and Everador to join the index next month, and taking the place of RHI and Bloom. Our topics are, as indicated, BDO, ICT, GTCAP, RLC, DNL, Pure Gold, IMI, Solar Philippines, Home, and Keeper. That's it for my presentation. Thank you very much for listening.